Hello and good day, viewers. I thought we would have a quick discussion on a hot topic recently, capital gains taxes. Dun, 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 dun. Everybody's favorite subject, the government's coming to take your money. So capital gains taxes, there's actually quite a lot of misconceptions about capital gains taxes. And here's my legal disclaimer. I am a real estate agent, not a tax advisor. If you have a specific question about your situation, I recommend you speak to a professional in that field, such as my wife, who is very smart and does an amazing job of taxes for a living. But capital gains taxes. So first things first, if you are selling a primary residence, you do get an exemption on your sale. So if you're an individual, your exemption is $250,000. And if you're married filing jointly, your exemption is actually $500,000. And capital gains is only paid on profit, not gross sales price, which is another big misconception. So if you are paying capital gains taxes, you're going to have your sales price minus your expenses minus your basis, and that would determine your profit. So if I gave you an actual math example, let's say you sold a $200,000 house, about our average price here in Columbia, South Carolina, and you had originally bought that house for $150,000. You spent $25,000 renovating that house up when you bought it, and you spent $15,000 on expenses when you sold it. So now you've got $200,000 is your sales price, minus $25,000 in renovation cost, minus $15,000 in your sales cost, and that would actually add up to $190,000, and of course your $150,000 purchase price. So that would leave you with a $10,000 profit. 200 minus 150 minus 25 minus 15, it's 10,000. Check my math if you want. But yeah, so you would only pay capital gains tax on $10,000 because that would be your price. Now there are some exceptions and things in there. If it's an investment property for you, then you don't get the capital gains exemption, but you can do something called a 1031 tax exchange and buy another property with the sales proceeds you received and avoid paying capital gains taxes that way. It's not a 1031 video. It's a complicated subject. Do a little research. I might have a video on 1031 already on the channel. I'm not sure. So that's kind of the process. There's some exemptions. You're paying tax of roughly 20%. It's going to be some variance depending on your income for the year. So again, that's where you check with your professional in the field to see exactly what you're going to be paying if you have to pay capital gains taxes. So again, if this was your primary residence you're selling and you've claimed it as your primary residence for 2 of the last 5 years, you should get the exemption that we mentioned where you don't have to pay the $250 or $500 depending on if it's individual or married filing jointly. So I hope you've learned something. Very, very basic video on a very complicated subject. If you have questions, feel free to reach out to me directly in the comments or email or text or whatever, and I'll help if I can. Or again, if you have an odd, unique, specific situation, if the property's been an investment property, you've received rental income, you might want to check with your tax advisor on your specific oddball scenarios, because that's probably why you're here. You have an oddball scenario. Hey, but if you're just one of those people signing your residence and you're getting a nice sales price, just know that you're not paying taxes on your overall sales price. Thanks for watching. Give me that thumbs up because it matters on my content. And I'd love for you to go ahead and hit that subscribe button while you're giving me the thumbs up. So thanks again. Brandon Hoffman, local real estate agent in Columbia, South Carolina. If you're selling here, give me a ring.